Across the board, Americans are paying more for everything, including housing, groceries, and gas. Consumer prices in June rose 9.1% year over year and is up 1.3% month over month. The cost of food, housing, and of course gasoline were all major factors driving those numbers up. President Biden is reacting to the report. He said in a statement, quote, "Today's data does not reflect the full impact of nearly 30 days of decreases in gas prices. Those savings are providing important breathing room for American families." Gwynn Guilford joins us now. She is an economics reporter for the Wall Street Journal. Welcome, Gwynn. Thanks very much for being with us. So the president is pushing back by pointing out that current energy prices, which have started to come down, are not factored into this report. Is that a valid point? Is the economy perhaps in a better spot than the report makes it seem?
Sure, there's some validity to that. Prices have come down in July. You had a peak in gasoline prices in mid-June, and they've come down, a few tens of cents since then. So that's real. That means something to people when they fill up their tanks. But there was a lot in this report to be worried about. Economists expected a pickup from May, but they did not expect an acceleration, for the most part, of 9.1%. Like, that is huge, and it means that inflation is more persistent than most people thought, and that we all hope.
Right, it is quite a leap, as you pointed out. Though it is somewhat of a lagging indicator. So, keeping all of that in mind, do you expect the Fed to aggressively raise interest rates in response to June's CPI?
Yeah, the Fed is probably in the late July meeting, this has probably sealed the deal for a 0.75 percentage point increase. Some FOMC members have already signaled their willingness to support that. So, with such a hot print, it's probably, we can probably expect that. But the thing, yes, the CPI report is backwards looking, but there are a couple of things in it that make that are a little disquieting in terms of what we can expect for the rest of the year. One of them is rent. When that picks up, that momentum tends to build. And so that's going to make it harder for overall inflation to come down. And the other thing is, we've been expecting give back in goods prices, which obviously surged a bunch during the pandemic, but that's not happening either, even though, there are signs that shipping costs and freight and things like that are coming down. So that's a bit of a mystery, and it's worrying because we really need those gains to come down if we want overall inflation to decrease.
And like you pointed out, once these prices rise, it's a lot harder for them to come down, correct? They tend to stick.
Yeah, that's especially true for housing.
Yeah. All right. Gwynn Guilford, thank you so much for your financial insight. We appreciate it.
Thanks for having me.